Up first here, Cardano's Vassal hard fork proposal submitted. Countdown commences. IOHK, the developer of the Cardano blockchain, has submitted an update proposal to hard fork the Cardano testnet. This initiates the countdown for the network's Vassal mainnet upgrade. The Vassal upgrade is scheduled to bring significant performance and capability upgrades to the blockchain. IOHK describes the fork as the biggest and best upgrade to date, providing a higher throughput, improved script performance for developers, and lower costs. One of the most significant updates noted by the team is the implementation of diffusion pipelining, which is designed to improve the scalability of the blockchain for decentralized applications. The update will allow blocks to be created more quickly, as they can be transmitted without full validation. If all goes well, the testnet will be upgraded on July 3rd, and the mainnet upgrade will take place around the end of July. The Cardano community has requested 4 weeks to test and upgrade applications on the testnet, and IOHK says the hard fork for the mainnet will take place when everyone is comfortable and ready. The Cardano mainnet upgrade has been postponed until July 29th due to several outstanding bugs. IOHK has stated that this is the most complex program of work they have undertaken. IOHK is focused on ensuring the upgrade is managed in a safe and secure manner. The Vassal node is creating over 75% of the testnet network's blocks, and IOHK believes there is good chain density to proceed safely. The most recent significant upgrade to the blockchain was the Alonzo hard fork in September 2021, which introduced smart contract functionality for the first time using Plutus scripts. Plutus is a smart contract development language specifically designed for Cardano. According to DeFi Llama, the upgrade was widely considered to be a disappointment, as Cardano still only has 11 dApps. The co-founder of Cardano, Charles Hoskinson, previously predicted there would be thousands of dApps on Cardano by 2021 and believes developers are waiting for the Vassal upgrade to launch their projects. Vassal Stoyanov Dabov, an artist and Cardano community member and ambassador, passed away in December 2021 after being diagnosed with pulmonary embolism. In honor of his memory, the Vassal node was named after him. Cardano is a POS blockchain that aspires to improve upon Ethereum in the areas of scalability, transaction speed, and fees. Some have called it an Ethereum killer. As of today, the native coin of Cardano, or ADA, is in 8th position in terms of market capitalization, with a value of around $15.7 billion. This is a significant decrease from its all-time high of over $3 in September 2021, suffering a loss of over 85% in value. So, I know this is something big that has been in the news lately. We'll continue to keep you guys updated as we hear more on that. Let me know your guys' thoughts on that. If you think it is the Ethereum killer, if you think it's going to work good in conjunction with it, let me know your thoughts. Up next here, breaking news. Grayscale launches legal challenge to Bitcoin spot ETF rejection. Grayscale has formally announced its intention to challenge the Securities and Exchange Commission's decision to reject its application to convert the Grayscale Bitcoin Trust, or GBTC, into a spot-based Bitcoin exchange-traded fund, or ETF. It was announced that Donald B. Verrilli Jr., the senior legal strategist, former U.S. Solicitor General, and partner at Munger, Tullis & Olson, had filed a petition for review with the United States Court of Appeals for the District of Columbia Circuit. According to the securities regulator, the application was disapproved in order to protect investors and the public interest. The proposal failed to demonstrate how it would prevent fraudulent and manipulative acts and practices. A similar decision was also made on Wednesday regarding Bitwise's Bitcoin Exchange Traded Product, or ETP, citing the same reasons. Grayscale Investments, which manages $12.92 billion in assets through its GBTC, has been waiting for a decision from the SEC on its application to convert its flagship Bitcoin Trust into a spot-based ETF since October 19, 2021. The decision will be announced a week before the July 6 deadline. Earlier this month, Grayscale announced that it had retained the services of former U.S. Solicitor General Donald B. Verrilli Jr. in anticipation of potential legal action by the SEC should its application for regulatory approval be rejected. Other attorneys on Grayscale's legal team include those at Davis Polk and Wardwell LLP, and its in-house counsel, including Craig Salm, who serves as chief legal officer. In March, Grayscale CEO Michael Sonnenschein told Bloomberg that should the application for his firm's Bitcoin spot ETF be denied by the financial regulator, they would consider filing a lawsuit under the Administrative Procedure Act, or APA. On Wednesday, James Seifert, an analyst at Bloomberg Intelligence, told his 19,400 Twitter followers that the SEC's decision on both ETFs came earlier than he thought but was expected. What do you guys think on the Bitcoin ETF? I know it was big, I feel like, I don't know, last year, a couple years ago maybe it was last year, and now it's coming back around. Let me know your guys' thoughts on that. Up next here, CoinFlex CEO says withdrawals are unlikely to resume on Thursday. CoinFlex CEO Mark Lamb has stated that it is unlikely that the crypto exchange will be able to resume withdrawals on Thursday, June 30th, as originally hoped. The company is still in process of searching for buyers of its $47 million in bad debt. Speaking to CNBC on Wednesday, Lamb said that more time is needed before the platform can reopen for withdrawals, stating that they will need more time. He went on to say that it is unlikely that withdrawals will be re-enabled tomorrow. The crypto exchange launched a $47 million token offering on Tuesday, June 28th, in an attempt to sell off its bad debt after one of its accounts went into negative equity. The offering, known as Recovery Value USD or RVUSD, was created in order to raise funds to cover the outstanding debt. The company said in a statement on Tuesday that it is hopeful withdrawals will be able to restart as planned on Thursday, June 30th. However, it is dependent on the token issuance being fully subscribed. CoinFlex has not provided any information regarding how many tokens have been subscribed to date, but CEO Russell Lamb indicated on Wednesday that the company is in discussions with several large investment funds to acquire the $47 million in debt. In an interview with MarketWatch, Lamb stated that the company has made significant progress in its token sale, with strong interest from distressed debt funds, existing customers, and investors. He added that tens of millions of dollars in soft commitments have been made by potential investors. The crypto investment platform issued a moratorium on user withdrawals on Thursday, June 23rd, citing extreme market conditions and uncertainty around a certain counterparty. It was later revealed that this was the result of a longtime customer of CoinFlex's account going into negative equity. CoinFlex CEO Mark Lamb publicly accused Bitcoin Jesus Roger Ver of owing the company $47 million in USDC on Twitter, claiming that Ver allowed his account to go into negative equity. On the same day, Ver refuted rumors that he defaulted on a debt to a counterparty, claiming that the crypto firm actually owed him a substantial sum of money. As an early investor in the exchange, Ver had favorable borrowing conditions. Lamb continued their Twitter spat by stating that the debt is 100% related to his account. His company categorically denies that there are any debts owing to him. CoinFlex's recent struggles are indicative of the wider issue of liquidity among crypto investment firms and trading platforms during the current bear market. This is yet another example of how the industry is being challenged at this time. The crypto lending platform Celsius Network is facing possible bankruptcy, while the crypto hedge fund Three Arrows Capital has been served a notice of default by Voyager Digital. It has also been ordered to liquidate by a court in the British Virgin Islands. So yeah, I know we've been talking about Celsius a lot. We've been talking about Three Arrows Capital. This is a new one for me, CoinFlex. Apparently they halted withdrawals as well. It seems strange to me that one person's account could create I know it's large, $47 million, but could create such an issue with the company. So yeah, that's a red flag for me. Up next here, OpenSea data breach causes massive leak of users' email addresses. OpenSea, the world's largest non-fungible tokens marketplace, has issued a warning to customers after an employee of Customer.io, a platform for managing email newsletters and campaigns, leaked the list of OpenSea customers' emails to an outside party. OpenSea has advised all customers that their email addresses may have been affected by a recent data breach. Customers are advised to be vigilant for potential phishing attempts. The NFT marketplace announced on Thursday that it had contacted law enforcement officials about the breach and that an investigation was in progress. It's so unfortunate when things like this happen because I feel like it's just another bad thing happening in crypto, and it's just one more tick when they're already trying to bog down restrictions. OpenSea has suffered from a number of major attacks this year, culminating in the most recent data breach. In May, the popular NFT marketplace's Discord server was hacked, leading to a deluge of phishing assaults. In the event, numerous user wallets were exploited. In January, the platform was subjected to one of its most severe assaults yet, in which an exploit allowed attackers to sell NFTs without permission. The marketplace reimbursed $1.8 million in losses. In March, HubSpot was hacked, compromising the confidential data of its customers. The individuals affected had their personal information, including names, phone numbers, and email addresses, exposed to unknown third parties. The security breach had far-reaching consequences, impacting not only HubSpot's own customers, but also those of its partner companies such as BlockFi, Swan Bitcoin, NYDIG, and Circle. This incident highlights the importance of data security and the need for companies to take adequate measures to protect the information of their users. OpenSea has warned that hackers may attempt to contact customers through emails from domains that appear similar to OpenSea.io or OpenSea.xyz. Users on Twitter have reported an increase in spam emails, phone calls, and text messages. This is unfortunate. It's not the first time this has happened. This has happened in the past. So hopefully they can get it straightened out quickly. I mean, once they have your email, there's not much they can do. Up next here, after 8 years dumping billions of XRP, Jed McCaleb's stack runs out in weeks. Jed McCaleb, founder of Ripple Labs, is close to finishing his 8-year XRP dump, with only 81.53 million XRP, worth $26.55 million, remaining in his wallet's balance. According to Jed Balance, a website tracking his XRP holdings, McCaleb's wallet named Taco Stand has been shedding an average of 4.06 million XRP over the last month, but has ramped up daily transfers to 7.3 million XRP, worth $2.39 million since Sunday, June 26. At the current rate of sales, his wallet may be depleted within the next 2 to 3 weeks, to the delight of the crypto community. On Wednesday, influencer and YouTuber Mason Verslius, or Crypto Mason, shared news of 22 million XRP being released over the past 3 days. On Wednesday, a parody account of McCaleb with 4,500 followers, who describes themselves as definitely not the real Jed, posted a photo in front of an eatery called the Taco Stand, saying it's almost there. The former Ripple executive has been selling off his once 9 billion strong XRP holdings since he left the company in 2014. McCaleb, Larson, and Brito were the 3 founders of Ripple, originally called OpenCoin, in 2012. Each founder received a share of 20 billion XRP, which was distributed among the 3 of them. McCaleb left Ripple in 2014 after a reported disagreement with Ripple executives. He took with him his entire XRP share, which amounted to around 9% of the total supply. Later that year, he co-founded the rival payment protocol Stellar, or XLM. Ripple Labs and McCaleb came to an agreement that he would lock up his XRP holdings to avoid a market crash should he offload them all at once. The lockup plan dictated that for the first year, he could not sell more than $10,000 worth of XRP per week. The plan would loosen up over time, raising the amount he could offload to $20,000 worth of XRP per week for the 3 years following. In 2018 and 2019, restrictions were placed on the number of XRP tokens that could be sold by an individual, limiting sales to 1 billion XRP per year. From 2020 onwards, this limit was raised to 2 billion XRP per year. Mr. Jed Balance has stated that Mr. McCaleb sold a large number of his XRP tokens between January and August of 2021, when XRP prices reached a high of $1.84 in April. In total, Mr. McCaleb sold 2.74 billion XRP tokens during this time period. In September 2021, McCaleb has taken several months' break from selling XRP, but has been steadily offloading XRP again since January 2022. The data shows that McCaleb had shed 627.6 million XRP so far in 2022. XRP's price increased by nearly 30% on June 24th, 4 days after recovering from 28 cents, its lowest level since January 2021. Cointelegraph's analysis suggested that the token's retracement rally could extend to 41 cents next. We'll have to see. And up last year, 80,000 Bitcoin millionaires wiped out in the great crypto crash of 2022. More than 80,000 Bitcoin investors have seen their millionaire status disappear due to the crypto market downturn, but lower prices mean the number of people holding an entire coin is growing. On November 12th, just days after Bitcoin hit a new all-time high of around $69,000, data from BitInfoChart showed that a total of 108,886 BTC addresses reported a balance greater than $1 million. As of today, with Bitcoin prices struggling to remain above $20,000, only 26,284 addresses are reported to contain holdings valued at $1 million or more. This means that the number of paper millionaires has declined by more than 75% over the past 9 months. The dramatic decline in the price of the flagship cryptocurrency has also impacted the number of whales, those who boast a Bitcoin wallet worth more than $10 million. While there were 10,587 addresses with a minimum cash value of $10 million in November last year, just 4,342 hold the same status today, a decline of 58%. Despite the decline in the net worth of former BTC millionaires, the bear market has seen a significant spike in the number of whole coiners, which now totals just over $860,000. This would suggest that retail investors are accumulating large amounts of BTC while prices tank. According to data from Glassnode, more than 250,000 addresses have added 0.1 BTC or $2,000 or more to their holdings over the past 20 days, further credibility to the retail accumulation narrative. The digital asset market, including Bitcoin, has been negatively impacted by a number of issues, including increased regulatory scrutiny, sustained geopolitical unrest, rising inflation, and interest rate hikes. The increasing uncertainty around the stability of global markets could lead to further price declines for risk assets like Bitcoin. This is according to commentators who agree that the current trends could continue over a longer period of time. At the time of writing, Bitcoin is trading for $20,005, down 1.63% over the last 24 hours and 37% over the last 30 days. With a total market capitalization of $382 billion, Bitcoin is currently the largest cryptocurrency according to data from CoinMarketCap. So there you have that. That's all we have for you today. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.